Welcome back to the channel, guys, your home of hopium-free crypto and economic market cycle updates. Today, let's look at the patterns that are forming on crypto. Now, there has to be a breakout that happens sooner or later, and it looks like it'll happen along with these high impact news announcements. So I'll check those out in the charts. Come on, Jason. Welcome back to the channel, guys, your home of hopium-free crypto and economic market cycle updates. Today, let's look at the pattern that is forming on cryptocurrencies. Now, this pattern always breaks out with some sort of volatility, whether it's extreme or if we get some slight volatility into this. But nonetheless, there is always a breakout, and this happens to trap traders, especially if they're unfamiliar with the time frame that this pattern is forming on. So we'll look at that on the daily and then go to the macro and look at it on the weekly. Nice quick video for you today. Smash up the like, subscribe if you haven't already. Of course, this is the update along with your little mini lesson on this particular pattern. I've got something new for the US users. Now, Bybit is still a sponsor of the channel. However, US users can't use Bybit. They can, however, use MEXC. It's very similar in the user interface and user experience, but I'll talk a little bit more about this later in the video. For now, let's dive into the analysis on Bitcoin, updating the charts, looking at this pattern, and what does it mean for us in the short term and the medium term. So this is the pattern right here. You can see that we're basically getting a very small, tight rising wedge, just like we've seen in the past, but on a bigger scale here. So this was on the weekly chart, the big dump, and then the market started to recover, higher highs and higher lows before it broke down. Now, I've got a lot of writing on the chart here, and the main thing I want to look at is this smaller section that we're seeing play out at the moment. The big thing to pay attention to here is the time frame between where this pattern is and looking left on the chart to where the next support and resistance levels are. So I've got a lot of writing here. Let's just try and break this down nice and simply. This yellow box is support and resistance, where the market could break to. You got support resistance above at around 23K, which is the 50% level, basically just before the market broke down. So we're using the same analysis from the macro time frame, looking at this Wyckoff bullish flip price of 26,900. That's this bar. Reason being is that it is a significant range bar. So we looked at the price range, the volume is very significant, and so matching those together, this gives us an idea of where the market basically broke down the market. So where the sellers really came in, the buyers came in, everyone got fearful around the same time and just shot this thing straight down. We see this again on the 19th of August. Increased volume, increased volatility, increased price range. We need to get above the top of that bar at 23,200 to start to flip this thing back to the bulls for the short term, because we're on a short term time frame. Now, this particular pattern here, you can see we're just basically gone nowhere for the last, we're into our 6th day now, just trying to break out to the upside. Whatever happens above this or below this within this yellow box, I don't think it's going to make too much of a difference, at least in the macro sense. In the short term, yes, it's going to make more support and resistance levels, and things get tighter and more messy and far more difficult to read the market because there's just a lot of information compacting in a small area. Basically, the prices keep overlapping each other. That gives a lot of support and resistance within a very tight price range, which makes things a lot more difficult to trade, which is why longer term traders will wait for the breakout of these zones to give clarity to the market. Now, this might be a little bit challenging to understand here, so I'll look at Ethereum on a macro view. Going to the weekly chart on ETH, this yellow circle here that I've got on the chart, 1, 2, 3, 4, 5, 6 weeks, although the market was down about 10 or 11 weeks, just looking at this 6-week pattern here, as you can see, the market break past the support. So this was the previous support at approximately $2,100. You look to the left and there was almost 12 months of nothing, which means that this trade or this market, the buyers and the sellers, have a lot further to look back and find previous support, and the support was in around 1700. So you can see once we quickly fell to 17, there was approximately 1, 2, 3, 4 weeks that held up around that level before it tanked again, and the market had to look left again to find some previous support. So when you've got a big time frame between where the market action is now and the previous support or resistance, because this works on the flip side as well to the upside, then you have a much cleaner pattern for the market to break down. Why is that important now on the short term? Well, we're looking at high impact news announcements, and a lot of people are waiting for what the Fed is going to say tomorrow morning for the US time, or afternoon for us here in Europe, or evening for you guys in Australia. And then we also have the next 3 days, at least on this week here. Jackson Hole Symposium is happening. So people are trying to play off the market and what is going to be said in these high impact news announcements. So this is the Forex Factory looking at the reds because we want to see when the big news announcements come, which have the potential to give more volatility to the market. So in terms of ETH timeframes, we look back to the left. We go to the daily chart now to look back to the left. There's not much time between where we currently are and the previous support and resistance levels at about $1,750 to $1,800, which means if we do get some volatility, it's possible that it's not going to be anywhere near as wild as what we have seen in the past. Why is that important? I like to understand in the market whether I'm going to see some big fluctuations, some big pushes, or if we have the possibility of just some small volatility. But for new investors, it's probably going to feel roughly the same. You might not understand the feel, but if you were here in June, the feel of the breakdown was extreme. We had big moves down. We also had the big move down in May as well. So if we do get a breakout here, is that going to be extreme on the emotional scale, the fear and greed index? And because we can look back to the left and see where the support and resistance is, this point around sort of $1,400, to the upside about $1,800 to $2,000, it really pushes us into this tight frame of price ranges to work with when we come up to these high impact news announcements. Now, of course, it could always be wrong and this thing could just shoot up to $2,300, $2,500, or shoot right down to $900. But over the course of history, this has proven to be reliably accurate to show us where these support and resistance levels are and to see whether this impact, this news announcement, is going to be very extreme or not. These high impact news announcements have the potential to swing up very quickly and swing back down. So this happens to chop and churn traders in that have buy orders or sell orders or stops when they've been entered. So you might get entered on the upside, it might flip back down, you get stopped out underneath the swing lows or wherever you've got your stops, just to see the market come almost all the way back to where it previously was. This happens around these high impact news announcements because traders, big money, know where the stops are being placed, and they basically try to run those stops in these high volatile times. It's much easier to run the stops when the volatility is high. But if you are looking to trade, obviously keep an eye on the support and resistance levels and just know around these periods that the stops can be run quite easily and then the market go on to go in the direction that you believed it was going all along. However, if you are an armchair investor and just watching what's going on in the market, then it's a much easier place to be in. Watch 1800 to the upside. Closing price is far more important than where the wick is. And then to the downside, approximately 1500, which is where that previous low is. And then the 50% level, 1450. So around 1450 to 1500 on ETH. Overall, for a bigger position, we're looking for a breakout above 2000 and then for the market to reach approximately 2300 to hit the bullish macro target for the overbalance in price and in time. It needs to get that high to give me that next big macro bullish check mark. Now the same pattern can be found on other cryptos like Matic, which is very highly traded. You can see the market is basically just churning between 85 cents and 75 cents. No clear breakout yet. However, there is a small bias to the upside with the swings just getting slightly higher. Resistance is at 90 cents and stops, or at least support, is approximately 72 to 75 cents. Solana also just slightly breaking down on the weekly chart, which means that it is in a weaker position than something like Matic. So it's still sitting on that support. We looked at this on the channel around $30 to $34. The week just broke the previous week, so that's not looking anywhere near as strong. If we're looking for clean trades, I'm waiting for a breakout above $48 or a breakdown for the short side of at least $30 back to that low of about 26. And we've covered previous support and resistance levels on the macro scale at about 19 all the way down to about $12. I know it can sound crazy, especially if you're a long-term holder, but we're just looking at what the chart is telling us, giving us the facts from the history on the chart, looking left on the chart. Recap on Bitcoin, the main thing I'm waiting for here is to see whether the market can break down past 20,700 or get a clean break past $23,200, which is this bar on the 19th. So if we can get that break down, then we're definitely looking towards approximately 19,000. Obviously the breakup gives us a chance to reaccumulate to then test the 25k level again and get back to hopefully testing for the bulls the Wyckoff bullish flip here at 26,900. At the beginning of the video, I mentioned that I've got an exchange now that US users can use. They couldn't use Bybit before, but this one is open to US users. It's been around since April 2018, so it has fared a bear market before. If you're interested, I've left a link in the top of the video description. Of course, don't go and trade leverage if you don't have a plan or you don't have any experience. Start out small. This also has spot trading on it, and you can get up to $1,000 of sign-up bonuses. So you could almost farm these cryptocurrency exchanges for those extra sign-up bonuses. Bybit's up to 4,500, MEXC's got 1,000 here, and there are plenty of others out there. I've left links in the video description for this. The user interface and experience is very similar to Binance. So if you're familiar with Binance or Bybit, then this is going to be an easy breeze to come across and use the exchange as well. That's it for the update today and a little mini lesson on these patterns. Now they can be scary, but as long as you look left on the chart to understand the support and resistance and the time between the pattern forming and how long the pattern's formed for, I'm sure you can stay safe out there in the market. Smash up the likes, subscribe to the channel if you haven't already, and I'll see you guys at the next video. Until then, peace out.